Imagine this, you're sitting in a room full of billionaires and they're discussing their latest investments. Stocks? Nope. Real estate? Not quite. They're talking about art, priceless masterpieces that quietly grow their wealth while others chase risky markets. The rich know something most people don't. Fine art isn't just for museums. It's a secret investment weapon. But here's the real question. Are you missing out on this exclusive world? If you don't start now, will you regret it when today's affordable pieces become tomorrow's million-dollar treasures? The secret world of fine art investing, how the rich get richer. In 2017, a mysterious buyer shocked the world by purchasing Leonardo da Vinci's Salvator Mundi for $450 million. The art world was in disbelief. How could a painting, once sold for just $60 in 1958, become the most expensive artwork ever? The answer lies in the secret world of fine art. Investing, a game the wealthy have been playing for centuries. Meet James Carter, a businessman who turned a simple love for art into a fortune. In 2005, he bought a forgotten painting from a small gallery in Paris for $25,000. By 2021, that same artwork was valued at over $2 million. How did he do it? He understood the hidden rules of the fine art market. The elite don't just buy art for decoration. They buy it as an asset, one that grows in value over time. Unlike stocks, which fluctuate daily, rare artworks often appreciate steadily. Even during economic downturns, fine art remains a safe haven for the ultra-rich. Take Pablo Picasso's paintings, for example. His artworks have increased in value by an average of 14% per year. That's a return most stock investors can only dream of. The secret: scarcity. Unlike gold or real estate, a masterpiece can't be reproduced. Once it's sold, it's gone forever. Today, auction houses like Sotheby's and Christie's handle billions in fine art sales, with new collectors entering the market every year. The question is, can an average person like you start investing too? The answer might surprise you. Would you invest in fine art? Tell us in the comments. Why art beats stocks. The hidden power of luxury collectibles. In 2008, when the global financial crisis wiped out $10 trillion from stock markets, something unexpected happened. Fine art prices barely moved. In fact, a Francis Bacon painting sold for a record $86 million that same year. While investors panicked over crashing stocks, the wealthy quietly moved their money into art. But why? Meet Emily Richardson, a tech entrepreneur who made her first million in stocks. But after seeing the volatility of the market, she decided to diversify. In 2015, she bought a Jean-Michel Basquiat painting for $100,000. By 2022, that same piece was valued at $3.2 million. Her art investment outperformed even the best-performing stocks. Fine art has a secret advantage. It's not tied to Wall Street's ups and downs. While tech stocks can lose 50% overnight, masterpieces by artists like Claude Monet and Andy Warhol continue to appreciate. On average, blue-chip art has delivered annual returns of 10–15%, often outperforming the S&P 500. Another reason art beats stocks? No sudden crashes. Stocks can collapse due to bad news. But a rare Picasso or Van Gogh holds its value because demand never fades. Museums, billionaires, and investors are always ready to buy. Even the ultra-rich like Jeff Bezos and Elon Musk are now investing in fine art. The secret is art isn't just for museums. It's for building wealth. If you had $50,000 to invest today, would you put it in stocks or art? Comment below. Start small. Think big. How to buy your first fine art piece. In 2012, a young marketing executive, Daniel Hughes, walked into a local gallery with just $5,000. He wasn't a billionaire or an art expert, just someone curious about investing in fine art. Fast forward to 2023, and Daniel's collection is worth over $500,000. How did he do it? By following a simple strategy that anyone can use to start investing in art. Most people think you need millions to buy art, but that's a myth. The truth: Some of today's most valuable paintings were once bought for a few $100s. The key is to start small and invest wisely. Instead of chasing famous names like Picasso or Van Gogh, look for emerging artists. In 2010, works by Banksy were selling for under $10,000 today. They're worth millions. So, where do you start? The best places are local galleries, online art platforms, and auctions. Websites like Artsy and Sayachi Art let beginners buy promising pieces for as little as $1,000. Even fractional ownership platforms like Masterworks allow investors to own shares in multi-million-dollar masterpieces. Another golden rule? Buy what you love, but think like an investor. Research the artist's career, recent sales, and demand. A painting's value grows with the artist's reputation. Today, Daniel owns works by artists who are now global sensations. His secret? Patience and smart choices. Fine art isn't a quick profit game. It's a long-term strategy. Would you invest in fine art if you knew where to start? Let us know in the comments. Spot the masterpieces. How to identify high-value art. In 2006, a man named Dmitry Rybolov bought a painting for $127.5 million, believing it was a masterpiece. Years later, he found out he had overpaid by $50 million. On the other hand, a lucky collector bought a forgotten Jackson Pollock painting for just $5 at a thrift store. Turns out, it was worth over $50 million. So, how do you spot real high-value art and avoid expensive mistakes? First, understand the 3 golden factors of valuable art: artist reputation, rarity, and provenance, ownership history. Works by well-known artists like Jean-Michel Basquiat or Claude Monet always hold value. If an artist has a strong auction record and their works are in major museums, their value is likely to rise. Second, look at the rarity of the piece. A one-of-a-kind painting is always worth more than mass-produced prints. Even limited edition pieces can grow in value if they are from an in-demand artist. Third, provenance matters. If an artwork was once owned by a celebrity or displayed in a major gallery, its price can skyrocket. In 2015, a painting owned by Elizabeth Taylor sold for 5 times its estimated value just because of her name. New investors should also study art trends. In the 1990 seconds, few people paid attention to street art, but today, names like Banksy and Cows dominate auctions. Those who spotted the trend early made millions. So, would you rather buy a stock that might crash or a masterpiece that could grow in value forever? Let us know your thoughts. Avoid scams. The red flags every art investor must know. In 2011, a wealthy collector paid $17 million for what he thought was an original Mark Rothko painting. Years later, experts discovered it was a fake worth nothing. Art fraud is a billion-dollar industry, and even experienced investors get scammed. So, how can you protect yourself? The first red flag is no provenance, ownership history. Every valuable artwork has a record of past owners, exhibitions, and sales. If a seller can't provide this, walk away. In 2016, a fake Jackson Pollock painting fooled buyers because there was no verified history behind it. The second warning sign? Too good to be true deals. If someone offers you a Picasso or Van Gogh at a fraction of its market price, it's probably a scam. Authentic masterpieces are rarely sold in private, rushed deals. Another scam to watch out for is forged certificates of authenticity. Con artists create fake paperwork to trick buyers. In one case, a fake Jean-Michel Basquiat painting with forged documents sold for $12 million before experts exposed the fraud. Always verify art through reputable auction houses like Sotheby's or Christie's, or use professional art authenticators. Online platforms like Artsy and Masterworks also ensure safer purchases. Fine art is a powerful investment, but only if you buy wisely. Have you ever seen an art deal that seemed suspicious? Share your experience in the comments. The Billionaires Strategy: Where to buy the best investment art. In 2017, An unknown buyer purchased Leonardo da Vinci's Salvator Mundi for a record-breaking $450 million. Later, it was revealed that the buyer was Mohammed bin Salman, the Crown Prince of Saudi Arabia. But here's the secret: billionaires don't just buy art anywhere. They follow a strategy, knowing exactly where to find high-value pieces that will appreciate over time. So, where do the world's richest investors buy their art? Elite auction houses. The safest and most prestigious place to buy blue-chip art is through Sotheby's, Christie's, and Phillips. These auctions sell works by Picasso, Monet, and Warhol, ensuring authenticity and value. In 2022, a Andy Warhol portrait of Marilyn Monroe sold for $195 million at Christie's, proving that top-tier art thrives at these auctions. Exclusive art fairs. Events like Art Basel, Frieze, and TIFOF attract billionaires and collectors worldwide. These fairs showcase rare works from emerging and established artists, often before they hit the mainstream market. Private sales galleries. Wealthy collectors often buy directly from top galleries like Gagosian, Hauser-Wirth, and Pace Gallery. These galleries handle rare, museum-worthy pieces that never reach public auctions. Online art platforms. Digital platforms like Artsy, Masterworks, and Saatchi Art now allow investors to buy valuable art without attending auctions or galleries. In 2021, an online sale at Sotheby's exceeded $100 million, proving that fine art investment is moving online. Patience pays off. How to hold and sell art for maximum profit. In 2003, an anonymous collector bought a Jean-Michel Basquiat painting for $5 million. Many thought it was overpriced, but in 2017, that same painting sold for a jaw-dropping $110.5 million at 2100 return. The secret? Patience and perfect timing. Fine art isn't a quick profit investment like stocks or crypto. The wealthy know that holding onto a masterpiece for 10-20 years can multiply its value. But how do you know when to sell? Watch market trends. In 2021, demand for digital art and F surged, making traditional art even more valuable. Smart investors sell when interest in an artist peaks. Choose the right auction house. Selling through Sotheby's, Christie's, or Phillips attracts billionaire buyers. In 2018, a collector sold a David Hockney painting for $90 million, making it the most expensive artwork by a living artist simply because it was auctioned at the right place. Provenance increases value. If your art was exhibited in a museum or owned by a celebrity, it becomes more desirable. In 2015, a painting once owned by Elizabeth Taylor sold for 5x its estimated value just because of her name. Now you know the secrets of fine art investing. But luxury doesn't stop there. What about fine wine? Want to learn how to taste like a sommelier and appreciate wine like the elite? Then don't miss our next video, How to Taste Like a Sommelier, the Art of Luxury Wine Appreciation. Hit subscribe so you never miss another wealth-building secret. Drop a comment. Would you invest in art or wine first? Let's discuss.